Happy Wednesday out there, Team 42. It's your skipper here at Darius to present our macro minute for Wednesday, March 12th, 2025. Hope everyone's having a wonderful day. So, as always, we'll start with the executive summary from today's leadoff morning note. If you'd like to review the analysis supporting these conclusions and to see if you need to make any changes in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So, today's key macro question is, does President Trump want QE soon or not? Our answers are the latest iteration of President Trump's aggressive trade policies, namely the imposition of 25% tariffs on steel and aluminum imports, is further evidence that the Trump administration is willing to sacrifice short-term pain for Wall Street and the big globalists they represent for what they perceive will be long-term gain for beleaguered Main Street workers. While risk assets are rallying amid positive sentiment stemming from Trump's assertion that a U.S. recession is unlikely, mere words are unlikely to provide sustained relief in the absence of more clarity regarding fiscal, regulatory, and trade policy. It will likely take months for that clarity to arrive. Although Treasury Secretary Scott Bessent confirmed there was no Trump put last week, we believe there is, although likely at much lower strike prices than SPX 5600 and Bitcoin 80,000. The Powell put is also much lower in our estimation, even though today's U.S. February CPI data were comforting for investors regarding the timing of eventual QE. Today's data are also consistent with our prior belief that reported inflation data were likely to be better behaved until the second quarter. That QE is coming in 2025 remains one of our staunchest fundamental beliefs. The bullporn purveyors will tell you that the short-term pain is almost over and that QE is coming soon. The bear porn purveyors will tell you that QE will come 20 to 30% lower in stocks and 50% lower in crypto prices. Like most things in life, the truth is likely in the dispassionate, data-driven middle where 42 Macro resides. Transitioning to our 42 Macro dashboard here, this one's a fun question. It's about copying Malay. Says, hey, Skipper, great call on the S&P sell. It saved me a ton of money. You're welcome. Appreciate you. Says, I've been noticing that the Donald Trump and Elon Musk have both been talking about Argentina's President Javier Milei on JRE and other podcasts. They seem to admire how he tackled Argentina's inflation crisis. Interestingly, Milei and Musk are close friends. Milei even gifted him a train saw recently. Here's a quick summary of what Milei did with Argentina's economy. He implemented radical reforms, including deregulation, privatization, and austerity measures, which helped bring down inflation from nearly 300% to just over 2% monthly. It's no wonder Trump and Musk are intrigued. In fact, they both hinted that they're trying to replicate his approach here in the U.S. When I look at the actions of this administration, the only theory that makes sense is they're modeling their strategy after Malay's playbook. Do you think Trump is genuinely trying to pull off the same feat? Could he succeed? And most importantly, will our stock market react similarly with the J-shaped recovery? So excellent question. I'm super pumped to unpack this because this is highly consistent with the kitchen sink thesis that we authored last fall that has since become, sort of consensus across global Wall Street. Again, we have a lot of experience creating things that become consensus across global Wall Street, not because I'm smarter than everybody, but because I'm crazy enough to do the work. And it's a lot of work to stay, 1 to 2 years ahead of global Wall Street or on certain themes. But anyway, that's neither here nor there. What is here is the fact that, in our opinion, Javier Milei and Donald Trump are taking a page out of the Ronald Reagan playbook, which is to pivot the economy from a fiscal largesse-driven paradigm to a supply-side economics paradigm that is driven largely by private sector innovation and productivity. That's what they would like to have happen. That process is not, in our opinion, going to be easy. It's going to require wringing out the excesses of the prior paradigm, the prior fiscal largesse paradigm that we saw under the Biden administration. That process, to the extent that they are really, truly, going to go full Milei or, in my opinion, full Ronald Reagan, remains to be seen. But at least according to the commentary that we've gotten recently, at least the net of the commentary that we've gotten recently, it seems that they are willing to, that their put has not yet, we have yet to hit the strike price in either economic terms or in financial market terms. There is a strike price for the Trump put. They're not going to, I don't think there's any political will to do what Ronald Reagan did, which was send the economy into a recession amid a 27% peak to trough decline in the S&P 500. I don't think Donald Trump has the kind of fortitude, to suffer through that. We also have the 2026 midterms, of which we know by this time next year, the politicians in Congress will be out banging the doors and asking for money and going on TV to further their campaign. So, Trump Scott Bessent have already outlined that there's a kind of this 6 to 12 month window with which they can kitchen sink the economy, blame Biden, and ultimately implement their policies as quickly and fervently as possible, such that by the end of that window, you're really starting to see a significant recovery in the economy, and obviously, probably towards even before the end of that window, a significant recovery in asset markets. And part and parcel to that significant recovery in asset markets is consistent with our view that we're going to see QE in 2025. Really, the key question is the Fed going to be proactive? And in order to be proactive, they're going to have to implement some form, or either transitory or permanent positive revision of the inflation target, or they're going to be reactive to a global debt refinancing air pocket that will happen if they are not proactive enough. So that remains our view. And obviously, President Trump kitchen sinking the economy would be contributory to a global debt refinancing air pocket, because as long as investors are concerned about the U.S. economy, they're not going to be willing to roll over, refinance existing credit. It's certainly not at the same price points and valuations and credit spreads. So investors need to be aware of that, how that may impact this global refinancing air pocket theme that we authored as well. So we'll wrap it up there. Darius Dell here presenting our Macro Minute for Wednesday, March 12th, 2025. Best of luck out there today. We'll catch you back here tomorrow. Cheers.